Hello from Chicago, Alan Knuckman here, high above the CME Group, talking energy, focus on crude oil. A quiet day in crude today, closing at $64 a barrel, up 25 cents, a range that has actually condensed over the last few sessions. So now crude typically trades 90 cents between its high and its low, so 64.20 high, 63.30 low. Now we have had 3 straight sessions of lower highs. Now that's after the 3-year plus high that we saw last Thursday at 64.75. They got this close to our $65 target. Now we've talked many times before about how crude had traded between 45 and 55, that target 65. Not quite there yet, so we'll have to wait and see. Now, if there is a full V recovery, as we've seen every time before, where the market's had a bit of a pullback, last week's low was 63 after that high, so that $1.75 decline on top of those old highs, that targets 66.50 on the upside. That's after we get through 65. I'm not saying it's a done deal yet, but I'm looking past that as the next objective. Also to be noted here today that we had a holiday hiatus, so typically we get the inventory numbers out on Tuesday and Wednesday. That's been shifted forward a day because of the markets closed on Monday. So no crude inventory data to focus on that typically drives the markets during the middle of the week. Also, let's talk about the dollar dive. Last week and here at the beginning of this week, the dollar's now at its lowest level since December of 2014. So it took out those lows that we had in 2017, and it's been look out below. Now that's a positive for commodities that are priced in dollars, like crude oil. That can be a catalyst, that can be a support point. As the dollar declined, we saw the euro currency move up to 123 yesterday. That's multi-year highs as well. Let's put that in perspective. The euro currency has been worth more than the dollar all through this crazy action that we saw with the Brexit and all the crisis du jour that we've seen out of Europe in the last few years. So the death of the euro currency has been greatly exaggerated. So to get back to crude oil, again, focus on that 65 we talked about, and we'll see if we can get there anytime soon. Then 66.50 is the next target. $70 is the midpoint of that extreme high that we saw years ago, and then that $26 low. So that's what we're looking at on the upside for this trend to continue. Support down below stands at the double top at $59. So to summarize today, up a quarter, $64 is the close in February crude.